What's up, everybody? I hope you're having a great Saturday so far. Today, I'm going to be giving you guys a free trade setup that perfectly matches and aligns with my high five trading strategy. So, if you've been following me at all, you know how successful my high five trade strategy has been, and it's only going to continue to keep showing you all why it took me so many years to perfect it and to get it down to a science. So really appreciate all the support so far. Make sure you like this video, comment other stocks you'd like to see, and continue to follow and subscribe to me on other socials. That way you don't miss any of these free setups that I'm giving out, or insights or knowledge or anything. I'm really here to help you all and to build up successful investors and traders along their journey and get burned a little bit less than I did when I first started and over the years getting built up here. But like I said, we're going to take a deep dive here on some technicals and show you guys what I'm seeing on the charts. So first up, we're going to be talking about Viking Therapeutics. And some of you may already know this name. It could be a pretty volatile name. It comes and goes in the realm of hype and a lot of people talking about it, and then it'll fall off pretty drastically, and then a lot of people will be talking about it again, so on and so forth. But they are a biopharma company that focus on treatment of metabolic and endocrine um, disorders. So mainly they're going to be focusing on obesity and some thyroid issues here. So just give you a little background on the company. So let's just jump right into these charts and technicals. So if you don't know, if this is your first time watching one of my videos or seeing anything that I put out, my high five setup essentially consists of, yep, you guessed it, 5 key indicators that I see that I will only enter a trade and when these 5 hit. And like I said, it hits at a very high clip, and I back tested it. I've used it. Um, I made a decent bit of gains off of it. Let's just say, so it works. Not trying to toot my own horn here, just trying to pave the path for what I'm talking about here, and why you should maybe think about using something like this or follow my setup and trade strategy because it's proven. So first thing on the high five setup is going to be some sort of charting pattern. As we see here, we have a bull flag, we had a breakout of the bull flag, and we have a pullback from the bull flag. And this is on the weekly chart. We haven't, and the reason I'm putting this out there and trying to give you guys this free setup and putting it on your radar now on a Saturday is that way you can kind of put it on your watch list going into this week. Like I said, this is a weekly chart. These things move a little slower. It takes longer because it's a weekly chart, but this is what I'm seeing. I'm seeing a clear breakout, massive, almost 19% week, and then a good pullback last week of almost 7%. Now, first thing up, like I said, in case you didn't know, I'm just going to run through them and then we'll actually talk about the chart. High five setup is going to be a charting pattern of some sort with a breakout, a retest, confirmation, and enter. Next is going to be a volume weighted a volume profile where you have a shelf that you can launch off of and a volume gap of some sort. Check, we got that. Third is going to be your MACD in a bullish moving in a bullish pattern upward trajectory. Your RSI making higher lows, moving in a upward trajectory, and your stochastic down here, which is your trend, as I like to call it, moving in an upward trajectory. I always say this to everybody. I always say this on my videos, and I say this, on my write-ups. When you have multiple probabilities all pointing in the same direction, the likelihood that you are right increases significantly. With a bull flag pattern, let's just talk about the bull flag because that's what we're talking about here. With a bull flag pattern, when you have a breakout, the statistical average success rate of that breakout is 67%. So you are already in a statistical advantage just off this pattern alone, right? So let's add to that. Let's add to the statistics. Let's add to that 67% and let's make it closer to 90% plus through what I'm about to show you. So, in order to show you, I'll just show you the high five setup and then I'll talk about where I think we're going based on where we've been in the past. So, bull flag breakout, this is what I want to see. We have this breakout, we have this pullback here. I want to see a pullback down to at least, if we zoom in here, at least right here, which is your 9 EMA. I want to pull back to about $67.90, $68, and I'm going to nibble a position. Then I want to pull back down here to the breakout area, and I want to see a pullback down here. I'll nibble a little bit more of a position, and then I want to see a bounce. And once I see that bounce in a green candle, I'm going to start rapidly adding to that position more and more as we pull up. And if anything goes against me, or I'll put in a stop loss here under this volume shelf underneath these the 9 EMA and 21 EMA, and I will put a stop loss down here with the risk that I want to put on, and you all would do the same as well. So I consistently have been saying, I'm giving you the keys to the car. You just have to drive the car. Of course, this is not financial advice. Everybody has to play their own book, just like I do. But I am not opposed to giving you all the keys to the car, the keys to the setup, and you guys just have to drive the car or deliver on the setup through, making a successful trade and doing the risk that you want to take and so on and so forth, right? So I want to see, like I said, I want to see a pullback back to the 9 EMA, back down to this somewhat of this volume shelf and have a bounce here off of, I'll just show you. So breakout, a retest down here at some point, and a continuation higher. Once we engulf over these wicks, that is very bullish, and we come back down to retest that engulfing because that created resistance. Now support creates this bounce back down off support and continue higher up into this volume gap, which would be about 49% higher from this point. If we take the measurement over here of the bull flag, we get a measured move up to $157.28. Now, mind you, it's going to go like this, right? Just all over the place, and then it'll get up there. Mind you, it's not going to all happen. That is ugly. But mind you, it is not all going to happen. This is a weekly chart. This is longer term. It's not going to happen overnight. So with something like this, you're going to want to be playing, farther out options, not this crazy, in week option. This is a weekly chart. You need to understand what charts you're looking at and how to play them, and what risk, what reward, what risk to take for the reward, and the timeline you're looking at. So if we're looking at this, right, this started at the end of 2023. So we're going to draw this timeline of how long it took for the breakout. The bull flag to break out, to form and break out, took 329 days. So you measure that out, you copy it, you drag it over, you line it up, you come over here, you draw a line down, and it says September 2025. So what this is telling us, if we get this pullback and a successful bounce and move higher, which 80 to 90% of breakouts come back and retest the breakout point and then continue higher. So 80-90% come back, retest the breakout point. There are some that don't retest at all. And with those ones, you just got to say, well, it just didn't line up for me. It's okay. You don't need to trade everything. You don't need to hit every trade. It is what it is. Okay. So you have a measured move saying September 2025, we should be at $157.28 on the technicals. Now, of course, we can get there a lot sooner. We had this parabolic move, and this took from November 2023 only until February. So this took like 3 months to go 733%. Are we about to get that 3 month, 136% move this time with this measured move? Maybe. Who knows? But you have to always look at the timeline and play your options and play your shares with the timeline in accordance. So I think we talked enough about the bull flag and talked about all the breakdowns, the measured move up to $157.28, and the timeline out to September 2025 time period. Next, the second part is, like I said, the volume profile gap or a volume shelf. Well, perfectly, the 9 EMA and the volume shelf are sitting perfectly right where we would get this retest of your bull flag, which is amazing. That's what we want, right? So we want to see this pullback. We want to see this confirmation bounce. Like I said, I'll be nibbling a little bit. And then once we get this confirmation bounce off of these, that's a very bullish indicator along with everything else I'm seeing on the charts. Then I will build up my full position and we will be riding this thing, taking profits along the way. First profit target would be at about $100 for a 49% move. Second profit target would probably be about 130, and then finally getting out of the rest of my shares unless I'm holding a couple other options or shares for a move higher, because just because this is measured out doesn't mean it can't go higher. Like this bullish pennant down here, it broke out and the measure move is like here at $52. It went all the way up to $99. So yeah, you gotta always hold a little bit for the dream, I say. But you make your money, you take your gains as you go up. Don't be greedy. Take your gains. Okay, so 1, check. Bull flag. We want to break out, retest, and then we'll go higher. 2, volume profile gap. Got it. 3 is going to be your MACD. Your MACD is MACD over the signal line, which is blue over orange, bullish, and we are rising higher after kind of bottoming out down here. We are also over the 0 line, which is extremely bullish. We crossed that back in late end of 2023, and we have stayed above that since. Now we are down here, kind of bottom out, went sideways, and now back on the uptrend with volume and coming back in and increasing higher. Next, RSI. As you can see with the RSI, we have higher lows continuously going up. We have our RSI over our RSI moving average, purple over yellow, bullish indicator, higher highs, moving higher. Number 5, and not least, we have a higher low on the way up on the stochastic, increasing, going higher through the sweet spot. And like I always say, we can come up here and move sideways, and we're going to get into that now. So as you can see, we have a high 5 setup here. We are preparing to take a position and start a small position once we get to the 9 EMA, increasing the position once we get down to the volume shelf, and fully building out our position once we get a bounce off of the bull flag and a green candlestick basically throughout that week, essentially. And the longer you go in the week with a green candlestick, the more likely it's going to stick, right? So where do I think this name is going if we do get the final little bit of the setup that we need? Which, like I said, the setup's there. We have it on our watch list. We always want to be early to the party, never late to the party. This isn't typical. This isn't typical. Parties at friends' house where you don't want to be the first one there. You want to be the first one there when talking about the technicals and the charting, and being the first one to the party to be ready to take your position. Mobileye is a perfect example of that. With Mobileye, we were early to the party. We were about a month early to the party. And I think it's paying off very well right now. So I don't think I have to say any more about that. So if you don't know, check my other videos and posts and everything. I mean, we are doing very well on Mobileye. So I consistently talk about this. So we have the Williams R up here. We have a break over, and we have a sideways move. And like I said, multiple probabilities show you that we're sticking and going higher. So we'll just bring this down here, this bullish pennant that formed. We broke up, we went sideways on the Williams R, we went higher, we crossed MACD over signal line at that very same time frame that we were up there with a bullish engulfing candle and a follow-up candle. MACD bullish, high five setup, ready and going. We had higher highs on the RSI and continuing higher. RSI over RSI moving average. I'm just going to call it the moving average. Then finally, we had a bullish movement upwards on the stochastic, your trend, red over yellow, continuing higher, and then going sideways. And then what did we see? How did we know to stay in this trade? We knew to stay in this trade because you had the MACD, the MACD going higher, you had the RSI going sideways, and you had the stochastic going sideways, and the stock continued to climb. You also had the Williams R going sideways and continue to climb, right? So I will say with this trade though, because of this the volatility in this name, you would have exited on what is this? The week of March 13th to March 20th. The week of March 13th and March 20th. The reason you would have exited here is because you broke this box, you broke this low down out of the Williams R. You didn't break on the MACD, you almost did, but you also broke down lower highs on your RSI. You broke out of this box that you formed up here on the overbought area, and you also crossed down with your stochastic. So I say usually if you get 2 or 4 indicators going against you, it's time to take profits, get out, and you can always get back in. And you could have, right? So you got out here and you could have said, oh, wow, we had this bullish engulfing candlestick, and you could have got right back in once we went up back here and then started going sideways. But honestly, like with something like this and how these indicators work, if you get out, just find another trade. There's so many stocks out there. So next, we had this parabolic move of 733%, which is crazy. Same thing here. We had the Williams R break up here, continue higher, go sideways as we ran up without breaking down below the box and, staying within not staying below your red line, which is the highest it's ever been across the board, while also not breaking down too low. While you had a bullish cross on the MACD over the 0 line, continuing higher, higher lows on the RSI, continuing higher until you got up to oversold area where you're still good, you're still in the box, and also your stochastic down here, a break upwards on the stochastic through the sweet spot, continuing sideways, and then you guys see where the bubbles are, where the circles are. So your MACD stayed bullish during this time, right? So we had this huge run up, and then your MACD stayed bullish, but you had a lower high on your RSI. You had crossing downward on your stochastic, your trend. You had crossing downward. You broke the 80 line downward to go into the sweet spot on the opposite direction. And you had your Williams R break down out of your sideways moving box, essentially downward. So this time you had 3 indicators saying, hey, we just went up 733%. It's probably time to take some take your trade out, right? So you should have been taking profits on the way up. Always be taking profits on the way up. And then you should have fully sold out of your position. Even if it pulled back to here before you got out, you still made all these gains. That's the great thing about it, right? So you see back in 2022 to 2023, 2023 to March 2024, and now we have a bull flag breakout, a high 5 setup. And look at that. I just created a box We now have a pathway here, and we continue sideways while the stock goes up. We have MACD going up. We have RSI continuing higher, higher lows. RSI over moving average higher, bullish, and you also have your RSI up here, which you can draw a box right here too, and it'll continue sideways for however long. And I showed you, I told you where you should enter, how you should enter, and I also told you what you should be looking for on an exit, and I told you some profit taking points for the stock as well. So again, I gave you the keys to this setup. I gave you the keys to the car. You just have to drive it. I'll be doing my trades and I'll be playing my trades out exactly how I mentioned them. This is not financial advice. You have to drive the car yourself. You have to do the work, put on your own risk to gain the reward. Also understand this is a volatile name. They are not a profitable company. They just reported earnings. They have zero revenue. All their products are in the pipeline. So it is a very risky name, but they have a lot of very hyped up products and products that are about to take flight here soon, or the stock would not be up as high as it is, obviously, and continue to play out like this. So yeah, that is the setup. All for free on a Saturday. That's going to be it for me today. Until tonight, I'm going to go hang out with the family and enjoy my weekend. But I really appreciate all the support again. Like I said, follow, subscribe, whatever I'm putting this on, whatever you're seeing this on, whatever socials you're seeing this on. I really appreciate the support. I'm really here to help you guys and continue to build this community up. And yeah, we're just getting started, and I look forward to helping you all in any way I can if you want it. How to become a profitable trader, how to build wealth for you and your family, and how to become a better investor. I'm not perfect. I'm not an oracle. I just have put in a lot of work to get to where I am on an investing side and strategy trading side, and the two systems that I have work really well. So I really appreciate it, everybody. Hope you have a great weekend, and if you watch this, drop some love down in the comments and give it a like. Appreciate it. Have a great day.